You know the feeling when you get your CPA report for taxes for that year and you realize how much did I pay in taxes or how much do I owe? And you just like stare at the number, wondering how that's even possible. Well, I've been there and I've talked to so many physicians who understand exactly what that feeling is like. The truth is, so many of us end up paying way more in taxes than we need to, not because we're doing anything wrong, but because we're not being strategic. In today's episode, I'm going to walk through 10 smart tax moves you can still make before December 31st to save thousands, legally, ethically, intentionally, so stay tuned.
Welcome to the Passive Income MD podcast, where we talk about creating your ideal life through multiple streams of income. If you enjoy hearing about this stuff, make sure to hit subscribe. Now let's get on with the show.
Hey everyone, hope you're having another great week. This week was tax week for me, where I finished up my taxes, finished talking to my CPA, and it reminded me that a few years ago, a friend of mine who is also an anesthesiologist called me like completely frustrated. He had a great year financially, but his CPA told him his tax bill was ridiculous, several $100,000. And he said, I don't even know how this is possible. Like, I worked my butt off and I feel like I'm just giving most of it away. He happened to live in California, high tax state. So I understood exactly what he was talking about. I mean, I think we all know physicians, we're never taught to be proactive about taxes. In fact, I feel like sometimes without businesses, without other types of income, without smart planning, we just get crushed with taxes more than the average individual. Feels like everyone else has ways to minimize their taxes, and you hear about it all the time in the news, different politicians, whatever it is. And we're like, what about us? You know, we work hard, so we know how to earn income, but we're not really sure how to keep it. And that's where tax planning comes in. And I'm not talking about just tax filing. I'm talking about strategic planning to minimize your taxes and take advantage of the incentives that are out there for us. By the way, as I'm saying this, I wanted to recognize I'm not a CPA or a financial advisor. Everything here is for educational purposes, so please discuss your specific situation with your own tax professional. Okay, and so we have a little time before the end of the year, depending on when you're listening to this. And so with that time, I want to make sure that you're strategic, and maybe there's some moves you can make before the end of the year to minimize the taxes you pay for 2025, which of course get paid in 2026. But just making some of these changes now can create a huge benefit for you, whether it's before December 31st or after. So maybe some of these things might work out for you. Number one, you want to just prepay next year's business expenses. Like whether you're a 1099 physician, maybe you do locums, maybe you'll run your own practice. Even if you're a W-2, in some ways, one of the simplest things you can do is prepay some expenses before December 31st. If you own your own business, your own practice, of course, it's easier. Like we're talking about malpractice insurance, CME, software, rent, anything that you're already planning to pay next year. If you prepay that this year, oftentimes you get that deduction in this year and you can basically push the tax can down the road. And this only applies if you use something called cash-based accounting versus accrual. If you don't know what I'm talking about, don't worry about it. But it's about how much comes in and how much comes out at that moment. If you do that kind of accounting, this can work for you. So there's certain things you can prepay, early pay in bulk, pay in a big amount before the end of the year, and it will really help you in terms of the taxes you owe for this year. Okay, number two, you can buy a business vehicle. Not everyone can legitimately do this, but I remember my CPA called me up one year and said, hey, you need to buy a vehicle. And I had no idea what he was talking about. He said it will minimize your taxes. Certain vehicles over 6,000 pounds can qualify for something called Section 179. And if you use it for at least 50% for business and it's in service before the end of the year, there are ways to create a nice deduction on using this vehicle. Now, you don't want to just buy the vehicle for the deduction, and you want to make sure you do it correctly. Otherwise, the IRS can negate this whole thing. But if you run your own practice, you go to different locations. If you're meeting with patients, if you're doing different planning that it requires you to drive, and you can justify it, then it can be a powerful thing. What happens is most people buy these vehicles and they finance it, so they put down a smaller down payment, but they can deduct the entire purchase price of the vehicle. If this sounds like something that might apply to you, just look it up and ask your CPA about it. Okay, number three, you can upgrade your tech, your tools, your equipment. If your laptop is on its last legs, or the tech or equipment in your office or business is at a time where you might need to do an upgrade, this might be a great year because you can write it off in the year you buy it. I love especially doing this with tech, whether it's things like your phone, whether it's your computers, whether it's podcasting gear. And of course, there's a ton of sales that happen at the end of the year too, so it's kind of a double win. You might want to plan that out because buying that before December 31st versus after December 31st can make a big difference. Okay, number four, There's something called an accountable plan. Again, this is not for everyone, but it's an IRS-approved way for a business to reimburse its owners or employees for business-related expenses. Like if you have an S Corp or an LLC, this one can be a big deal. So again, you can reimburse yourself for things like your home office, phone, internet, mileage. The business deducts it and you get the money tax-free. I've found that most physicians who run small businesses don't have this set up, so they end up missing out on thousands of dollars of just some legitimate deductions each year. You just have to create a really simple policy. Your CPA can help you write that. And then every month or quarter, just submit an expense reimbursement form to your business. You keep receipts, mileage logs, or whatever it is, and it can save you thousands of dollars in deductions every year. Hey everyone, I have a quick question for you. Are you looking for a secure and reliable long-term investment strategy? Meet Eckert Enterprises. It's a family-owned and operated firm with over 35 years of experience specializing in U.S. energy and alternative investments. Here at Passive Income MD, you often hear me talk about the need to diversify. One of the safest investment strategies available today are mineral rights. And with Eckert Enterprises, you can diversify your portfolio. Their team is committed to helping private investors like you and me identify and develop successful diversified portfolios. With an average return on investment of over 24% across their portfolios, the Eckert team is dedicated to helping you build and protect your wealth through long-term passive income. All of this while minimizing the risks associated with traditional investments. So check out Eckert Enterprises. If you want that great investment experience, go to EckertEnterprises.com. Again, that's EckertEnterprises.com. Hey everyone, I have a question for you. What if there was a way to make your money work for you instead of the other way around? Let me ask you, are you looking for a way to create passive income and secure your financial future? Or maybe you've stayed away from real estate because you don't have time to be a landlord. Then I want to introduce you to Passive Real Estate Academy. It's the revolutionary platform that we created that teaches you how to invest in real estate passively with little or no effort on your part. In just 4 weeks, our comprehensive course will teach you everything you need to know about passive real estate investing and help build that confidence in you so that you know that you're making a great investment choice. We created this course for busy people like you, and we're going to guide you from every step of the way, from understanding even the most basic information to understanding the jargon and understanding underwriting so you can make sure that you're making a great investment, that you're maximizing your returns and minimizing your mistakes. And the best part, you can do this all from the comfort of your own home with absolutely no prior experience required. So it's time to prepare yourself and learn so that you can be ready for these deals that you see, because the time is coming. So don't let the demands of your job or the current economic climate dictate your financial future. So join Passive Real Estate Academy and build that confidence to know that you're making a great investment when it comes to syndications and funds. So visit our website at PassiveRealEstateAcademy.com to learn more and take your next step to financial freedom. Now back to the show. Next is something called the Augusta Rule. I love this one because I'm a big golfer. For some of you know about the Masters. It's based in Augusta. This is where it all originated, where they were renting out their home during the time of the tournament. This rule came about where you can rent your home to your business for up to 14 days a year, and that income is completely tax-free to you. Your business gets the deduction, and you get the income personally tax-free. So many physicians use this. I mean, you've got a business, a practice, and they do this every December for an annual business planning retreat at their house. They document the rental rate, that's like the comp that's normal in the area. They hold the meeting. They get to write off the expenses, and that's like a really clean legal transfer of money from your business to your personal account, and I think everyone should be using this. All right, number 6, there's something called a donor-advised fund. Now, if charity and giving to others is a routine of yours and something you do on a consistent basis and important to you, this might be one of the smartest ways to give. This thing is called a DAF, or donor-advised fund, where you can donate cash or appreciated stock, and you can get the full deduction now, then decide later which causes you want to support. So for example, let's say you bought Tesla stock and it's appreciated quite a bit, and you know you want to make some donations, whether now or in the future. You could put that appreciated stock, that full value of that stock, into a donor-advised fund. You don't need to pay capital gains taxes on it. And that entire amount, just so you know, has been earmarked for you to give in the future, but you can take that deduction immediately. I love using it because it creates a nice deduction for me. I don't have to pay capital gains, and it allows my giving to be really organized and intentional. And you can manage that fund yourself, and it's really easy to decide who it goes to, the amounts, and how often. And especially when it's a high income year and your stocks have blown up and they've done well, or your assets have done really well, and you want to donate that in there, this might be a great way to do that. Especially, again, if you know you're going to be giving a certain amount every single year or percentage or to a certain cause every single year, this is a great way to do it. Number 7, this is to defer income and accelerate expenses. If you can predict next year is going to be a lower income year, maybe you're going to take some time off. Maybe you're going to cut down a little bit. Maybe your family or your spouse is going to part-time, or they're going to stop working. Maybe you know you're going to cut shifts, which would be an amazing thing. Consider deferring your income to the following year and then accelerating expenses. That means wait to send some of those invoices until January or whatever it is, meaning when you get paid actually in January. But you might pay for things like your CME, again, those costs like software, insurance, whatever it is, pay for it now. It allows you to shift the income and expenses from calendar year to calendar year, and you can manage your tax bracket a lot easily. You can manage your tax bracket a lot easier. It's 100% legal, and it's effective when it's done properly and if you're thoughtful about it. Number 8, this is where you can pay your kids. You probably heard about this. If your kids are in your business, you can pay them a fair wage. And the cool thing is, I think the number right now as I'm speaking this is about $13,850. It's tax-free to them. You get the deduction, they get the income, and you can even use that money to fund a Roth IRA, which can actually compound the benefit for them. You have to decide what that meaningful work is and pay them an appropriate wage. Like, for example, for shredding papers, you can't pay them $100 an hour. But it's one of the best ways to teach kids about money, I found, while keeping more of it in the family. Again, talk to your CPA about this, how to do it properly and document properly. Number 9, of course, one of my favorites, using real estate and bonus depreciation. I mean, one of the biggest advantages of real estate investing is how it can reduce your tax burden while building long-term wealth. As we know now, bonus depreciation and acceleration has gone up significantly in this year because of some of the new bills that have been passed. It means that investors can deduct a huge portion of their property value in year 1, whether you own it or you invest passively. Of course, that gets treated a little differently from an active or passive income standpoint, but you can use those deductions in the year where you invest to offset whether it's passive income or even active income if you can qualify as a real estate professional. I mean, that's one of the greatest benefits of investing in real estate. There's a tax strategy to it. And again, you don't invest just for the taxes, but there's a strategy there that's wrapped inside an asset like real estate that actually grows over time. So I feel like it can be a huge win. Just being intentional about when you invest and when you can offset some of your taxes can be really beneficial. For some of you, maybe you had a nice return this year for an investment, or you sold a property, or you did something like that. Then being intentional about when you invest in the next property, you take those deductions, hopefully in the same year, to offset some of those gains makes a ton of sense for a lot of people. All right, and 10, the short-term rental loophole. You probably heard about this. If you own or bought or plan to buy a short-term rental, like an Airbnb, this is where things can get really interesting. You probably heard about the real estate professional status, which I've talked about before at length. It just means that when you're a real estate professional, you can qualify as such per the IRS rules. I'm not going to talk all about it. Look for that podcast on that. When that's possible, what you can do is offset some of the paper losses from your real estate, where you can invest and create deductions, and then offset your day job income as a doctor. Now, usually the spouse will do that because they're the ones that can qualify. For a lot of people, it's not possible just because of the way the time works out, how much effort you have to put into it. But with short-term rentals, there is a quote-unquote loophole where you materially participate more than anyone else for that year, and you put about 100 hours in. Then you become essentially an active professional with that short-term rental property. You can use the deductions there to offset your active day job income. And this is a lot more attainable for a lot of people. I've used it personally. I bought near the end of the year, self-managed for a few short stays to legitimately put it into use, and did it the right way per the IRS rules. I was able to claim a huge deduction in that first year, offsetting a lot of active income. So this is definitely something, if you're interested in getting into short-term rentals, this is a great time of year to consider that. Now, here's something overall that I wish someone had told me earlier in my career. Filing taxes is what you do in April, but what you do now is tax planning. And what I mean by that is the end of the year is about being super strategic about how to set yourself up for the following year. Like wealthy people, they plan taxes now at this period. They meet with their CPAs. They play offense. Most physicians, I believe, play defense at this time. They hand things off to their CPA. They don't think about it until the following year. They have to go and pay, and they're surprised by the amount that they do. And they're surprised by the amount that they have to pay. I don't want you to be shocked. I want our community to be proactive. And if there's anything you take from this episode, it's for you not to wait. Start planning now before December 31st, and that will completely shift perhaps your return. I mean, these 10 moves, they might seem small on their own. If you're a billionaire, probably a lot of these things don't make a lot of sense. But I find that every $1,000, $2,000, $5,000, you put all that together, it makes a real difference. And every year I meet doctors who say, I wish I would have done that before the deadline. I missed it. So don't let that be you. Even one of these strategies can make a difference. So take some time, set an appointment with your CPA before the end of the year, now that they're done the major period, and say, hey, can we talk through strategy? And if they're not open to doing that with you, that may signal that you probably don't have the right team behind you. Remember, the goal isn't just to make more money. It's to keep more of it so you can use it wisely to create the life that you actually want to live. And I hope that we can support you in any way. Don't hesitate to reach out. Thanks, everyone. Let's talk again soon.
Enjoy the show? Let me know by dropping a review in the podcast app you're listening to us in. And if you haven't already, make sure to hit subscribe. Join thousands of physicians who are also on this journey to creating their ideal lives through multiple streams of income. Learn more at our website, passiveincomemd.com. Thanks again for allowing me to be a part of your journey. See you next time.